A very good morning to all our dear viewers. Education is not preparation for life, education is life itself. So felt John Dewey. Dear viewers, I bring you greetings from the Getty family and accord you a very warm welcome to our live talk show this morning, conducted by the Global Education and Training Institute. And the topic for the day is improving financial education and awareness on insurance. I think we all will agree with Sidney J. Harris in his thoughts when he said, the whole purpose of education is to turn mirrors into windows. So, dear viewers, under the aegis of disruptive education movement, today in this series of detox, we are honored to have with us Dr. Kiran Sood, who is a speaker of great eminence in the field of education, and she is here to share her immense experience and expertise on the above topic which I just mentioned. Education allows us to become better members of society. Dear viewers, you're requested to stay tuned to this live session of Getty's Global Disruptive Education Movement under the unmatched mentorship of respected Dr. Sunita Gandhi, who has not only conceptualized and founded it, but is tirelessly persevering to bring about great transformation in education, heralding the dawn of a new era, be it through teachers' training that Getty provides, to in service and pre service trainings, so that our teachers themselves can spearhead this disruptive movement, or a reformist curriculum of the literacy campaign, which is spreading its wings, reaching far and wide, making its presence felt as a people's movement. And no matter what, we strive to disrupt education, that too positively. For the detox, we also invite policymakers, researchers, bureaucrats, entrepreneurs, and speakers from all around the world as agents of positive change. As profoundly as one can imagine, our present education system is currently evolving for the better. In the field of education, we have varied topics to agree or to disagree with. But Dr. Kiran happens to agree with the principles of Getty's disruptive movement, emphasizing on the need to break the shackles of the established models of the education system and to improve the prevailing one in the present scenario. Financial literacy is the ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investing. Financial literacy is the foundation of an individual's face an increasing variety of financial risks, including those linked to their retirement too. At the same time, public funding has been reduced or is strictly limited in most countries. Private insurance and pension products therefore play an essential role in social and financial protection. Yet, the public might have a low level of awareness of the risks that they are exposed to, and lack of literacy, knowledge, and skills in insurance and private pensions, questions, and products. This talk addresses these topical and unexplored issues as part of the ongoing OECD project on financial education. After a comprehensive analysis of the main challenges and presentation of practical solutions, Dr. Kiran Sood is here to share with us her vision. But before we move on, let me throw a little light upon Dr. Sood's illustrious career. She has 18 years of teaching experience in reputed educational institutions With a strong educational background, with a doctorate degree in portfolio analysis and a master's degree in commerce. She is currently working as an associate professor, Chitkara University, Punjab. She is also into financial accounting, financial management, business statistics, banking, and insurance. Her strategic management, organizational behavior, cost accounting, strategic financial management, management accounting, and you can go on and on. So, without much ado, ma'am, I hand over the show to you this morning for your presentation. You're warmly welcome, and Getty is privileged to have you with us. Over to you, ma'am.
Yeah. Thank you and good morning to all the listeners. And first of all, I would like to say thanks to Getty this initiative. That's really wonderful, and you are doing wonderful. That adding more knowledge to the like you are giving an opportunity everyone to learn more and more skills. And yes, thanks. Rather, I would say it's a privilege for me to be a part of this session today. You have given me an opportunity so that I can share my views on a topic I think which is very, very, very relevant. And that topic is improving financial education awareness on insurance. So, thanks for this. So, without wasting much of time, uh, as we all know that our financial world, how much we can see how much it is revolving, the evolution is taking at a very, very rapid rate. Specifically, I will be sharing my views on this insurance industry. We have seen, due to this ongoing pandemic, specifically, the need of insurance in our lives. That is like, I think nobody can challenge this. This pandemic has taught us lessons related to the risk associated with our lives. Risks are there. Risks were earlier present. Risks are still present in our life, and it will be present. So that you can say it's like omniverses. And looking at the importance and the need of the insurance, you can see, especially if I just mention here, like related to COVID oriented, uh, looking at the scenario where this COVID challenge, we have this outbreak has, you can say, highlighted the importance of, you can say, uncertainty. Because we all know that how much risk is something which is quite uncertain, and it is very difficult to measure risk. So, up to some extent, we can say insurance is giving a kind of cover to our lives. And insurance is like a financial tool also, where and it's like an investment opportunity also up to some extent. But using insurance, how you can minimize the risks, not just only because of this COVID-19. There are several types of risk associated, for example, fire, marine, risk associated to our lives also, risks on roads, like that, accidents. So there are different types of risk that can be covered if you have a cover to your life, and that is normally given by the insurance industry. So, I would like to share my insights on the topic of insurance. Yes, as you can see, that we all know that insurance, it's like a protection that saves us from any type of financial losses in our life. We use insurance as a security tool, as a financial tool, or up to some extent, investment opportunities are that associated with insurance. And yes, we definitely do risk management also. It is connected with risk management also, because using insurance as a financial tool, we try to minimize the risk. We see, one thing is very much clear, that we cannot eliminate the risk at all. Risk can never be zero. We can just minimize the negative impact of risk. Although risk is that word which is very, very difficult to measure, especially in these days. Either you look at COVID-19 or any other example, that you can take the example of Ukraine, right? The activities which are going on. So this is highly, highly uncertain, and to measure the degree of risk is very difficult. It is challenging, no doubt. Technology is playing a great role in order to measure the degree of the risk. Why risk plays an important role in insurance? Because when we buy any insurance policy, either it is related to life insurance or it is related to non-life insurance, to whom we call general insurance, we pay premium for that, right? And premium, for paying premium, the basis behind premium is the degree of the risk, right? So, okay, if we say premium for life insurance, that is still we understand. But yes, again, that's not that easy. Normally, we used to say that premium for higher age will be comparatively higher, because as we know that age increases, risk to life is also increases. So somehow we associated that due to more age, you have to pay more premium, because the risk of death, that are like chances are very more in case of like a person of higher age. But what about risk management in other types of insurances, where to whom we call non-life insurance or general insurance, like fire insurance, marine insurance, travel insurance, motor insurance, health insurance, etc., etc., etc. So we have developed so many techniques. There are so many techniques. Technology is doing a great role, but still we have not reached to the that level, because this is something which is difficult to measure. But yes, we can't stop that. We have to take steps further, right? And as we all know that normally, in case of insurance, it's basically like a contract, right? Insurance, basically it's like a contract that takes place between two parties. Normally, one is the company and the other one is the customer. Basically, two parties are insurer or the insured. So there is a contract that takes place between two parties, and one of the important point, on the basis of that contract comes into existence, that is you pay a premium, right? That is basically the price of securing your life, or maybe the price for securing your other assets. Or in consideration to that premium, that price, the insurance company, the insurer, basically they try to cover the loss associated to your life, if it is a life insurance, or they try to cover the loss associated with other assets which are non-life, right? So that is, and that contract which we normally frame between these two parties, there are some important, or you can say essential elements of that contract which has to be present. Otherwise you cannot enter into that kind of contract. First of all, the element of utmost good faith has to be there, because when you enter particulars, all the information related to the cover for which you are taking the insurance policy, that has to be like very, very authentic, right? And on the basis of that, you are being provided by the insurance the cover to secure against those losses. So yes, that contract has to be fulfilled on those requirements. You are liable to enter into a contract, right? And there is a consideration for which you are going to protect or save someone's asset or the life. And yes, there has to be a kind of subject matter that plays an important role for now what the question related to subject matter that normally comes here, if it is a life insurance, then yes, I would say the life will become the subject matter for which you are going to pay the premium, and then accordingly the company will assure you that whenever that risk associated to the life, again it is an uncertain, but whenever that will happen, we will try to compensate through claim, right? We used to call it claim for that. So, right, this is how the process or the concept this flows between two parties, basically. right? Insurance company and the person, basically we are the customers or the insureds. Okay, all types of insurance, as I told you, basically insurance deals with, there are two main areas of insurance, or insurance is broadly divided into two parts: life insurance and non-life insurance, or you can say general insurance. They are based on some principles, and almost all the principles are applicable on all these types of insurance, or basically these are the segments, except the one that is not applicable to all types of insurance. The first one, as I already told you, the principle of utmost good faith, that has to be there. That's the basic requirement, because both the parties, when they are entering into a contract, they are entering into a kind of deal where company is assuring that information provided by the customer, they are all they are very very authentic, and there is nothing related to, for example, if you are buying life insurance policy, as I told you, if you are, for example, there are two-person, one is of 50 years, one is of 20 years. The person of 50-year always definitely has to pay more premium because of more age and more risk associated to that, as compared to the person who is having of lesser age. So risk is more. So in that case, you need not to hide your age, or maybe you are showing wrong identities to the company, so that you need not to pay, that much of premium. So yes, your ID should be fair. There should not be any kind of deceiving from the side of customer to the company. So it's not just related to only in life insurance, maybe the another type of insurance. For example, if you talk about health insurance, for buying any health insurance policy, you need to show a medical report, right? That's the basic criteria. uh, Otherwise you will not get benefit of that health insurance. For example, you go for a health checkup, and then you found that like severe problems are there, maybe related to anything else, then in that case you might face difficulty for getting a health insurance problem. Or if you are getting a health insurance policy, that you need to pay a higher premium for that, because looking at your health report, the company will decide you to how much premium you need to pay. If there are so much of complications are there, then accordingly, so chances are there you will try to pretend, you will try to give that report which is not the authentic one. So later on, if you, for the time being, showing a wrong report, you buy a policy, and later on, for example, after some time, the fact will be disclosed by any person, then you will not get the claim for that. So yes, any type of principle, it's health or any other, yeah, the principle of utmost good faith, that trust, basically the contract between those two parties, trust is the basis of that contract. So yes, you have to fulfill that requirement, right? Insurable interest, this is very interesting principle, as I told you. uh, Insured must have an insurable interest in the subject matter. For example, I am going to take a life insurance policy. Why? Because I have an interest in my life. Sometimes a spouse is going to take a policy. Wife has insurable interest in husband's life. Husband has like insurable interest in wife's life, and accordingly the family, etc., etc. So there should be a kind of insurable interest, and due to that interest, why you are going to have that policy for that interest, because if something will happen, you will be into losses, a kind of maybe financial in nature or other type of. So yes, if there is no interest, then why you are going for it, why you are going for a policy, right? For example, you are the owner, you have a business, right? And you have godowns, and you want to insure the goods which are there in your godown. So if something will happen to the goods, then you will be into losses. So that is why you are going to take fire insurance policy for that. So this is a kind of insurance, insurable interest. For example, you can take the example of a car that is compulsory, right, in India. So here there is no question of taking a motor insurance policy, but because that's compulsory. But yes, if you take a car, you have the insurable interest in the car itself. Basically, the price, or okay, the other things are your emotional connect. that's a different thing. But yes, there is an amount. You have a kind of financial interest associated with that car. For example, you travel, and when you travel, you have insurable interest in your luggage. Sometimes you take insurance policy related to your luggage also, so you have insurable interest. So when something happens to your subject matter, then there will be some losses, and you do not want to bear those losses. So that's why you take a policy, and that's why the principle of insurable interest comes into picture. Yes, this is a very important point. Principle of indemnity means to compensate the loss, basically, uh, to indemnify the loss. And indemnifying is basically a kind of guarantee, and this guarantee normally provides by the insurance company to a customer, to the person who is taking buying any type of policy, so that you come back to your previous position in which you were before arriving into losses, right? This type of indemnity normally provided by insurance company for any kind of uncertain event. One thing is very much clear in all types of insurance policies, all the events are uncertain, and that is why risk is associated. That is why they are uncertain, so that is why risk is there. Or you can say risk is there, so that is why they are uncertain. So risk or uncertain, they are totally, like, they are very much related or interdependent to each other. So as I've given you example, the loss of goods lying in go down, the loss to your luggage, or maybe any other type of loss, for example, health insurance, etc. So basically, the objective here is to indemnify those subject matters, right? But only when the risk will happen. For example, you have taken a policy that while traveling, and your objective was to have a safe travel, and then you have taken a policy that's for ensuring your luggage. But if nothing has happened, there is no uncertain event, things go well, and then you reach to a destination, then it is fine, right? You have paid it, okay, paid it, you will not get any claim for that. So there will not be any kind of indemnification, right? Basically, you have paid a price, a kind of consideration. So in return to that, the insurance company, they are assuring you, okay, if you are paying this much of premium to us, we are assuring you, okay, we will pay this much of compensation only if that uncertain event will happen. But one important point here, it is in case of life insurance, as I have said, that all types of insurances are uncertain, where the risk degree of risk varies, right? But if we talk about life insurance is the only insurance where we say there is no uncertainty, because there is death, and the death will be certain. We don't know the time and the date of the death, but yes, we born, then definitely we will die someday. So we don't know what day it is, what date it is, what year it is. So in that case, death is not uncertain, death is certain. So yes, for that certainty of life insurance, there is a life insurance, different types of policies are there, and then company gives you compensation. Now in case of life insurance, two things happens, that the claim which you will get maybe at the time of the death or the maturity period, whichever is earlier. Normally this is this type of policy which you see in case of life insurance. So whichever is, like, for example, you have taken a policy of 20 years and other side death. So out of which 20-year or the death, whichever happens earlier, you will get the compensation, you will get the claim amount, or we call it sum assured. So this is how, on the basis of this indemnification insurance works further. As you can see that this is basically a kind of promise or a compensation. For example, if you see that you have taken a car insurance, right? Car is insured for this $10,000, right? Car is insured for $10,000, but actually, when you see that this uncertain event happened, it doesn't mean that if you have paid for $10,000 but actual losses that you borne, they were just $3,000, so you will get only whichever is less, or and that is for actual loss. For example, if the actual loss is 12,000, now in this case the actual loss is 3,000, you will get 3,000. But just assume, replace this $3,000 with $12,000, but you have paid only 10,000, so you will get whichever is less, that is 10,000. So this is how that the calculation goes on related to indemnification. So basically, you will not get more than the amount for which you have paid for, or whichever is less. That's the point that are normally taken into consideration, right? So, as I already told you, that insurance contract, it's a kind of protection, and that those protection are all related to your uncertain events, unexpected events, right? So, okay. And moving on to the other important principle, that is another principle of contribution. Sometimes contribution normally takes place when you are going to share your subject matter with two companies, right? So accordingly, when you will get the compensation, then you have to then accordingly you will get the compensation on the proportion basis. And this basically contribution, why we go for this contribution basically helps the insured to go for indemnification. And that indemnification, as I already said, it is limited to actual loss from all the insurable contract. It's not like that if you have availed this the principle of contribution, you will get more. The point related to indemnification will be applicable automatically if there are more than two insurance companies from which you are going to secure your assets or any other thing, right? For example, if you can see that you have entered into two type of contracts with two companies, right? And for what is the purpose behind entering into that contract? That is for a used Lamborghini, right? And that is fully covered, okay? So for example, you say that there is a policy that covers $30,000 for a property damage, and for from one insurance company you have taken a policy of $30,000, and from another insurance company, which is like State Farm, you have taken a policy of $80,000. So in total you have taken 80,000, 30,000 from one company and 50,000 from another company, okay? And you will see that that you end up with actual causes, and that is the actual damages that happen to your car that worth rupees 50,000. See, you have taken a claim policy for 80,000 from two different companies, 30,000 and 50,000, but actual losses which has happened to your car, they were just worth rupees 50,000. Now what will happen? How will you get how will you compensate it? In what way you will get compensated? The same proportion, 30 or 50 means 3 is to 5, 3 by 8 and 5 by 8 will be applicable to this amount of 50,000. For example, 50,000 into 3 by 8, and you will get 19,000, and then similarly 50,000 into 5 by 8, you will get 31,000. So proportionate principle will be applicable, so that either you will not be into a kind of that position that you have been paid, you are paid by the company. So basically the proportionate principle will be applicable. Both the companies will pay to you in the same proportion for which you have paid to them. The proportion of 3 is to 5 will be applicable here. So this is basically contribution. Each of the company will pay to you as per the compensation, looking at the contribution only, right? And again, the indemnification will be applicable because you are not getting paid more than the actual losses. For example, if I say here, let's twist the example. For example, you have paid 30,000 to one insurance company and 50,000 to other insurance company, but actual losses are, you can say, 90,000, right? Actual losses are 90,000. So yes, you will not get 90,000. You will get 30,000 full amount from Allstate company and 50,000 full amount from other company, State Farm. So whichever is less, that will be taken into consideration. This is the another important principle, right, under which an insurance normally paid a loss under a policy, right, keeping into consideration that all rights and remedies belonging to the insured against the third party, and yes, with respect to any kind of loss. For example, here I can give you an example here related to uh, just you need to assume that a fine day your car happens to hurt, and then what happened basically, that is because of a driver, right? So now when you see what happened to your car, that car has been damaged, right, and that guy doesn't even seem to accept the fault, basically due to which the accident happened basically. So in that case, you are not in a time that you enter into such kind of fight with that person, right? Or that you have, it should not be a feasible or optimal way to enter into any kind of argue with that. So you move on with your damaged car, and then instead get your comprehensive car insurance policy to pay for the damages. So in this case, what will happen? The subrogation could help you out basically. So basically, in this case, the insurance company, because it is very difficult for you to get compensation from the third party because of which you have entered into the losses to your car. So your insurance company will enter into your position, like you, just like you are the real owner of the car. Now company will help you. So company will hold the third party responsible for such damages, and then the company will reimburse both the amount you spent out of your pocket, plus the money, plus the amount of that money that your insurance, basically insurance company, that the which have been paid for due to the damages and then losses have been caused. So this is how basically the principle of subrogation applicable when a third party enter into the picture, and then it is very difficult for you to get a claim or get compensation for that mishappening or that uncertain event here. Okay. Now, moving on to the next principle. Yes, the principle of loss minimization. This principle normally, it's like, it's debatable, but yes, it is important also. Minimization. We should always try to take steps, max to max steps, related to minimize the losses. For example, just take a very practical example. For example, you have bought a fire insurance policy, right? And yes, fire, as we all know, fire is just like other uncertain event. But okay, your building that got fired, maybe because of maybe because of short circuit, or maybe because of whatever reason. So you are not a person who will just look at, okay, that is going on, you are not taking any precautions, any measures. So in that very particular period of time, you should give a call to fire brigade, so that you can minimize the losses coming out of that. It's not like that you will just watch it because you have in your mind that why to call fire brigade, because I have a policy with me, they will take care of that. No, what are steps, what are the steps which you are taking, precautionary measures you are taking in order to minimize the loss, right? If we try to apply this principle of minimization to a life, then I don't think so that would be justifiable, because okay, we see the reason behind death, that varies. There are several reasons. Sometimes there is sometimes the reasons behind that might be an accident, or maybe on ongoing disease, etc., etc. So that is very difficult to apply in case of life insurance, but so that is why it is always debatable, that minimization, right? Okay, coming to the point, other general insurance, because general insurance is very, very important, as all the principles are equally important for life and general insurance, except the related to indemnification, right? So basically, these are the segments, different segments, or the portfolios. Non-life insurance is dependent on all these different segments. Looking at all these segments, I would say, I think you will also agree with me that in the last 2 3 years, we have seen how much health insurance is been evolving to our lives just because of COVID-19, this pandemic or this outbreak. We have seen how much health insurance is important to our lives. We all know that Like we know that in India is a developing country, and there's a lot uh, like we see that there is a market, or there is a lot of untapped market which is not under the cover of insurance, and specifically the health insurance. Even I'm not talking about people living below poverty line. They don't know about health insurance. Look at the people who are from middle class family. People don't know the importance of health insurance. They feel it's an expenditure. Why to pay for a premium for uh, that event? For example, we know that every general insurance policy or every non-life insurance policy, they are renewable every year. For example, today I have bought an health insurance policy. I have paid a premium of 10,000, just an example, but nothing has happened to my life. So people feel it that 10,000 I have wasted. So that is not a right approach. You are paying that instead of paying all of a sudden any amount which you cannot bear just because of any mishappening. It's better to pay something that you can. That's a wise decision. You should have take that wise decision, because it's not just only because of pandemic or COVID-19. Again, the same point I would like to highlight here: the risk of life. Risks are changing their features, just like you can say the COVID-19 is changing. So, yes, looking at the severity or the importance or uncertainty in our lives, we should look at such kind of policies, because they are giving you a kind of financial security, or, yes, up to some extent, you can say a kind of future security also, because when you get the amount, a lump sum amount after some year, you can use it for investment purpose also, and yes, you can also use that as a tax saving purpose also. Some of the insurance I would like to state here: burglary insurance is very much important. It covers it from your financial loss related to any kind of burglary into your home, right? Basically, it is that kind of act of forceful entry to your house or maybe to your business premises, and the person that enter that with the purpose behind illegal intention of theft. So there are many things related to burglary insurance. I would like to cover a few here, right? For example, the purpose is financial losses, that's no doubt, and you want to cover the losses basically coming out of theft here, or maybe the robbery here. If you want to cover the losses related to riots, then yes, you need to take an extra covers, and then accordingly you have to pay extra premium. So based on the riders and the premiums, you can see there are conditions related to. Basically, this is the concept that comes here under burglary insurance, that is just to cover the financial losses, either it is through theft or through robbery or maybe riots, right? So you have to take an extra. As you can see that a standard burglary policy is there, that can be that can be extended, in which you can cover losses maybe due to riots, strikes and fire. So yes, if you are going for extension because the risk is increasing, right? So yes, accordingly, the losses are very very uncertain. The magnitude of risk is very very high. So accordingly, you have to pay more, right? So these are, you can say, what normally we cover under this: damage to the home or to the business premises. Normally, that is being covered. And business provises due to damage. What kind of damages? Like damage to the home or to your business, either it is forceful or any other kind of activity which is unlawful, right? Or yes, because of theft or burglary, right? What things normally you include here for basically the coverage for this burglary insurance? What type of policies, or basically what type of assets normally being included here? These are the important assets for which you get a financial cover: cash, valuables, home appliances, electronic gadgets, money in transit, etc., etc. Stocks, yes, as I told you, this is to business oriented. So stock means that for in which you are dealing it, right? Depending upon the nature of your business assets, the plants, equipments, your all fixed assets, and the jewelry itself. Coming to another engineering, another type of non-life insurance, engineering insurance. It deals with that that gives you a safeguard to the risk normally associated with construction of the project or installation of project or related to any kind of machines or equipment, right? Now coming to this process, a very simple process, right? You can see now, as you all have seen, that because of this COVID-19, when there was a lockdown, we were not supposed to leave the doors. So things were totally changed, right? There were online buying and selling of policies taken into consideration, right? So as I told you, the insurance industry has totally evolved, and there was a need behind, and still there are lot many things to keep into consideration. So this is just a very simple process, right? You customer consult, and then insurance company look at all the material on which you are going to insure, and then looking at the subject matter, either it could be a life or it could be any asset. The company will give you a price, maybe looking at the health, also looking at the age also. For example, if the goods are already in highly of flammable, right, that kind of nature, inflammable nature, then accordingly you have to pay more. So where there is a higher risk, you have to pay more. And then issue of the policy according to the payment, customer receives the policy, right? At time, I see I have written a point, sometimes you need to go on site for investigation also. Now this was the challenge when there was a lockdown, right? How it will take a major role here, that is very difficult, because where at times investigations are required. So in that case, how you can go for with online investigation? Same in the case of medical checkup, when you were buying all health insurance policy online. So there were challenges behind. So using AI, big data, blockchain, things are evolving. How you can buy a health insurance policy where health checkup is mandatory, very very mandatory. And this is claim settlement process is the another important point where, yeah, you see so many frauds are there taking place, so many frauds are taking place. And again, just like in case of selling of the policy, we are also using technology in case of claim settlement, and especially the blockchain is doing wonders uh, in order to strengthen or to overcome such kind of frauds related to the claim settlement of the policy, right? So these are just very simple steps, right? You need to call that, and then you need to provide the loss list, and then convenience to an assistant, and then they collect all the materials related to the requirement of insurance. The process begins to the third party, and then they transfer the rights to of damaged party, and then they will provide you a kind of number where you will get the payment. So this is the process which is full of verifications, right? So again, what it was challenging when there was lockdown, so how technology came into the picture and giving a kind of relaxation, right? Now looking at some figures, that is very very important. As I already told you, insurance is like various segments are there, various players are there. I have kept health on the top, not by choice. It is on the top. It Earlier it was not on the top. Earlier it was motor insurance, but this COVID-19 has brought many challenges for various sectors. Just like we have seen that layoffs are there, people are losing jobs, but this COVID-19 has brought opportunity. Challenges are there, like difficulty in buying and selling. But if you just look at health insurance, for health insurance, it's like it's a kind of opportunity. People started buying, and government have given sanctions of many health insurance policy, right? Have given very much approvals. So many approvals are there related to health insurance policy. They have taken into consideration this COVID-19, and can see the market share of non-life drastically increased all of a sudden. Earlier it was not like that. Things were totally opposite, or it was just the motor insurance. Motor insurance is just like that, remains in top two. The reason, only one of the main reason, that's the compulsory, right? So yes, we should try that kind of initiative, although it is difficult, but it is not impossible. The way we have made motor insurance compulsory, we can make health insurance compulsory. But yes, for that there are many things to do. Crop insurance, you can see 19%, because we all know India is a agriculture, based on agriculture land. But yes, our farmers, they are not that much literate. So that's the challenge behind, right? The land is depleting, population is increasing. So in order to feed this population, that's very difficult. So how crop or agriculture insurance playing an important role. Climate change and the fire insurance, they are totally connected, right? Looking at that also, but people are not taking it. Fire insurance normally being taken in case of business houses, right? Miscellaneous, it might include anything. Personal accident, okay. Third, liability. Marine is one of the oldest insurance, right? And that depends upon the business which are relying on marine insurance. Engineering and aviation is another sector that is being affected because of this COVID-19. Aviation and travel you can include in miscellaneous. So it's, so you can just see the purpose behind sharing this data with all of you, looking at the market scenario of all these, how the insurance is revolving, where we need to spend more on having more exposure. If you see the market penetration of India as compared to the world, that is very, very less, right? So because of lack of awareness or people don't know about the insurance, right? This is the same graphical version of this table, just nothing. I have just converted this table into the graph, right? Where you can see again health is on the top, or health or motor, they are the top two competitors, right? And then, yes, as I told you, that technology is doing wonders. So, yes, I have just taken one example here because this is the blockchain based cases, how the blockchain is playing a great role across the globe. For example, if you can see, I would like to take just few first case here. The company, to say company based on Germany. So what they are doing, they are basically focusing on, their objective is to minimize the cost associated with processing of the claim, because processing of claim, as I told you, it's very lengthy time. It is very important. Normally people get dissatisfied, or I have seen that people full of grudges convey, they have complaints, and many time you get delayed, or right, or that convenience related to this claim process, that plays an important role. So one of their, this company has developed a decentralized insurance related application that is coming in the form of an app, and that basically focusing on crop insurance. The beauty of this app is focusing on crop insurance, and the main objective behind is to minimize the losses associated with the crops due to any kind of uncertainty in the weather, right? So it's a kind of a step taken in order to procure the losses which are happening to our agriculture sector. That's the, and yes, we as I already told you, we don't know how to take it further, the processing system. So basically through an app you can process it, your claims, and then so that you can compensate easily, and then accordingly you can spend on the revival of those subject matter. Looking at another, the guard time company based in California. So what solutions they are providing, they are providing solutions to various industries, as you can see, defense, logistics, finance, or cyber security. What is the basically reason behind that kind of solutions, for in order to again curtail the practices, or yes, minimize the cost associated. And the focus here, it is to minimize the cost related to shipping company or the logistics company, right? And the company has introduced basically a platform that is known as Insure Wave. So with that platform, they are connecting market leaders and buyers. And yes, again, the main important objective is to minimize the cost, and that procedure has to be transparent and efficient, right? Another important application, for example, B31 based on Switzerland. So what they are doing here, that is, now, yes, as we all know, that big data doing wonders in each and every field. So similarly, in other industries, insurance industry, big data playing an important role. When we started buying insurance through online way, especially the health insurance, so much of data normally been exchanged between companies and the customers. So that data should go to the right hands, right? So vulnerability of the data, streamlining the payment, because when you buy insurance policy, you need to share your personal ID. So the safety security of that data, that plays an important role. We have seen so many online threats, crimes are taking place. So that company is giving you a kind of protection, so that that data which is very very important to you cannot be, should not go into the wrong persons, right? So this is how they are using this, right, blockchain based applications. This is the other application where you can say, one of the, as we all know that when we buy, I told you that when you go for luggage insurance at the time of traveling, so we have seen at time air traffic databases. So you face difficulty in that case. So you face difficulty in getting the compensation for the luggage. So on the basis of real time and with the intervention of this technology, which is blockchain, they are giving you real time solutions, right? And you can see that what I've mentioned over here in 2018 December, highly digitalized blockchain based independent network of this Fiji has started, and then they started compensating payments up to 80% delayed flights at a world level. So this is how things are evolving, right, through the concept of this blockchain. And as I already told you, one of the important point which is playing a great role in the overall development of this, I would say, FDI. FDI plays an important role, foreign direct investment, right? Which was earlier, because we need capital where we can spend, right? We need to spend on infrastructure. We need to strengthen our department where we can. We need to bring customization in our products, right? So for that we basically need funds, because insurance industry is a capital intensive industry. It is not labor intensive. It is basically a capital intensive industry. So yes, the last union budget, this was evolved. Earlier it was 26%, then it for 26 to it went up 49%, and this time it is 74%. So that plays an important role. And on this ongoing pandemic, we have seen the importance of financial security, right? And this FDI has many positive impacts in evolving insurance, as well as creating job opportunities, right? And with the help of this, you can say FDI, you can increase the infrastructure, right? Infrastructure and all those requirements. Okay. So this is, I think, from my side. And in the last, I would just like to add that climate change impact, that is very, very important point. And the whole world, just like the whole world is facing issues related to climate change. So one thing I would like to end by saying this only, that gone were the days when we just frame, when we fix the prices of the insurance policy looking at the scenario. But the scenario right now is very, very uncertain. Our actuaries cannot do the justice looking at the climate change. It is very, very difficult to measure the risk right now. So we have to use a convergence of technologies, so that we can we can come up with the right solutions, and no customer will be underpaid or overpaid, and then accordingly they will be compensated for their policies. Okay, this is from my side. I cannot hear you, ma'am.
Thank you so much, ma'am.
Okay,
Thank
okay.
you. Uh,
Yeah.
very relevant points made by you, ma'am. The future is right in front of us, very uncertain, but is knocking surely. And the question is, what do we want from our future? In the era of digital transformation and with the advent of big data, Digital literacy and data literacy are becoming increasingly essential. With that, you have reinforced the idea of financial literacy, insurance, and how to improve the existing system and make all of us aware about the risk factors that lies in the future ahead and how we can benefit from the policies which is absolutely to our advantage. The risks cannot be eliminated, as you said, but they can surely be lessened with the insurance as a financial tool to cover. Very well said, ma'am. Now, just a question that I would like to pose is, what
Sure.
do you think is meant by good financial education, and why is it important for us students?
As I already told you that if we look at the data, specifically the insurance penetration and insurance density of India as compared to the world, it is very, very low. uh, it is better to have that knowledge of insurance from the school life, or maybe as at least from the college life, so that they understand. Because I know that people feel insurance is just like wastage of money, especially if there is something related to non-life insurance. As I have given you an example of health insurance, they feel that I am at 20, okay, I am at the age of 30, 40, I am fit and fine. Why to pay for a premium if I am, like, I am totally free from, not suffering from any kind of disease. So they are assuming that paying insurance premium for something, for that event which is very, very uncertain, that's mere foolishness. So according to me, I think we should clarify them. We should give them a right direction that it is not just for that. You will get a kind of financial security, and then second thing, in order to that to encourage people to buy such insurance, you have seen that government is giving a kind of tax deductions benefit also. And if I say that under ATC you get a maximum deduction of 1,50,000, or specifically if you go for health insurance, you get a tax deduction of under 80D, that is within a limit of 25,000 to 50,000. So, and it's not just for all these things, you have a bright future also. I have seen students making their career in the field of actuarial science. And that is because now, especially after this COVID, I would say this COVID has brought an opportunity, and we should try to have the exposure of that COVID-19 which has they have given to this insurance industry. I have seen so many insurance companies are coming, and then jobs are taking place. The jobs of analysts are very much in demand in case of insurance industries also. And yes, the actuarial demand is very much high. So for the student it is very, very beneficial. They can make their career also in the field of insurance, specifically in the non-life insurance across the world. I have seen the concept of green finance, in which you see that people don't know about what is green finance. We talk about sustainability, nobody knows about sustainability. Sustainable insurance are coming to the market. So this much of awareness is very much required among the students.
Thank you so much, ma'am. Very relevant points made and very, very impressively put up. I'm sure our viewers have benefited, and those who will eventually be watching the show will surely appreciate the presentation and have wonderful takeaways with them. Thank you so much, ma'am, for having taken out your time and for being with us. We look forward to having you sometime in the future with some other topic and to enlighten us and to throw light on. Thank you
Thank you.
so much,
Thank
ma'am.
you. Thanks.
Have a wonderful day. Thank you, dear viewers.
Thank you.